Now, is India as attractive from a risk-return trade-off? Maybe not today. We do offer scale, but are we offering equally attractive dollar returns? The feet on the street, ability to underwrite the technology, and the contractual structure are the top three things I can think of from a debt perspective.
Is it going to be the big boys with the big balance sheets where the equity is going to go to, or is it?
So the big boys are able to get the ecosystem together,
Mhm.
which is the OEM and the battery ecosystem. And that's where they have a big lead or a definite lead vis-a-vis someone who's just a startup.
This is
Hello,
good.
I'm the first time here.
Oh, you are going to have your time very soon. Away. Hey, welcome all. Welcome to Max on Mobility. And today I have an interesting guest, someone whom I have been waiting to have on our hot seat. Welcome, Divyanshu Srivastava.
Thank
I,
you.
and Divyanshu, I need to read out your introduction, because the kind of experience that you have. So you are an investment banker right now with
That's right.
Standard Chartered Bank.
Yeah.
And before this, you have worked with Deutsche Bank, SBI Capital Markets, PwC Corporate Finance, KPMG Corporate Finance, and now it's Standard Chartered Bank.
So in a nutshell, I've been a career energy M&A banker
Mhm.
and across the firms you outlined. Uh, I think we all started as core renewable bankers when it came to energy, depending because it was around 2011 or so when renewables started to pick up.
Uh-huh.
And I would want to kind of draw a parallel between what happened in renewables then and now what's happening in EV now at some stage.
Okay.
But started doing a lot of core infra energy deals. So became an energy banker over the last 10 years, have done a lot of deals of significance in the sector. And I think most of us are also transitioning along with this energy transition theme and are moving towards EV and ancillary industries from a banking perspective as well. So great to have the honor to sit with you and understand from you the nuances of the EV
In
business.
fact, it's going to be the other way around. People have been always wanting to talk about, hey, listen, we've had OEMs, we've had technology partners, but someone who has a view from an outsider view from a finance perspective. It was very important for us to have this conversation. So before that, so now you are heading the infra, energy, and logistics piece at Standard Chartered Bank. So the straight question, I mean, coming from a lot of people who are working in the EV space or clean mobility space, is funding winters. Let's start with that.
Yeah.
Everyone has been talking about it, but what's your view? What's really happening? Because uh, there's an insider view of what's happening on the financial, but it would be great to have your view of what's really happening around investments into the sector.
So let me first talk about the bigger picture, what's happening globally in this space. I think the path of climate change or energy transition or decarbonization net zero. I think it's not only India. This is a theme which is recurrent across all countries, geographies, right? India as a country is now competing with various pools of capital globally. It's not that we are the only country which offers EV or allied sectors as investment opportunity. So when someone sitting on their global IC, right, is
Mhm.
comparing an investment proposal from Europe, US, and India, obviously the IC will say, do where you make the most money, right?
Right.
Or do a deal where you make the most money. Now, is India as attractive from a risk return trade-off? Maybe not today. We do offer scale, but are we offering equally attractive dollar returns? Maybe not. And that is something we need to think through as a country as to how to kind of make sure the risk return metrics align vis-a-vis globally. So how competitive we become globally on this parameter is something will determine how much capital the country attracts.
Mhm.
So to give an example, a lot of private credit deals are happening, which are getting you a 12, 13% dollar return globally to the same investors.
Got it.
Credit should obviously be a less risky product vis-a-vis equity. So if you are making similar equity returns in India, then how is the investment committee or the decision maker incentivized to do a similar deal in India, right? So that's where I think because of the liquidity crisis, etc., I think every investing pool is choosing where the money should go. And that is where I think India is kind of lagged behind a bit, but I'm sure we'll catch up as a country soon on this aspect. So that's on the macro. And on the micro, right, coming back to India, I think we have a lot of companies which are trying to do something meaningful in this space, but rather than clarity, there is more confusion,
Mhm.
a lot of confusion.
Tell us about it. What does it mean when you say confusion? Your view on what this confusion is all about.
So if I break it down the EV into, let's say, high level three segments, right? OEMs, the charging support providers, whether it's battery swap or CPOs,
Mhm.
or the fleet, right? Now, OEMs, we had the entire issue of AIM subsidy. It's a known issue. A lot of innovation in OEMs is only happening maybe at the top two, three players. It's not happening across the value chain.
Right.
A lot of supply chain is still dependent on China. How much is domestic? How much manufacturing is happening locally? We have not seen that. On the battery side, also, we still hardly have very few companies who can make sell at the right price point in India.
Right.
And you need gigawatts of capacity to get scale to get sell at the right price point. Then whether you do an LFP or LTO or an MC is a question which we are still trying to answer.
Right.
Now everything has its pros and cons, but how does an investor take a call when today I'm trying to underwrite an LFP and then someone tells me sodium ion is the future,
Right.
right? We have heard those conversations. Now as a banker, I can only tell you what we hear,
Absolutely.
right, from various promoters. Now, if sodium ion is the way forward in the next 3 years, how can I underwrite an LFP chemistry today? Right. So that's on the manufacturing side. On the charging infra side, it's always chicken and egg, right? I think our what we did some numbers, the sweating of the asset should be around 27-28% for it to be viable. We are at 8-9% sweating or utilization levels on that. That's because we don't have enough EV penetration yet.
Right.
So it is again a problem of EV comes first or charging infra, and I'm sure globally also this would have
It's the same.
happened, but maybe India needs to find its own answers. On the fleet side, again, the question is B2B or B2C.
Mhm.
B2B means longer sales cycle, maybe probably lower margins. B2C means more expenditure on CAC, customer acquisition cost is higher. So there's a bunch of, if you have to answer so many questions right across the value chain and proven business models are very far and few, then how do I, as either an equity investor or even debt investor, and debt investors even more
More conservative.
requirements, more conservative, probably do something. So I think in a nutshell, this is what we are looking at.
Got it. But then is it a question of that's a very macro view of things, but are you seeing, let's say, signs of within each of these sectors, some companies slightly better off than others, and hence, is it a question of taking a macro view or trying to find the right places to look for?
Yeah,
And that's one of the things where most of the EV or the mobility players have always questioned the financing institutions. You are just looking at the wrong place. You're looking at
yeah,
the wrong, of course, the macro set of risks are there. But is that's
yeah.
one pushback always I have. I also
So,
am
so I'll
pointing
tell
that.
you how we are approaching it as, so we are investment bankers, right? So
Right.
we look at from an equity lens, but our bank obviously funds many of these businesses. We've done some of the deals in the EV segment as well. They look at number one is long-term offtake, right? Contractual structure. We don't have very established contractual frameworks in India yet. These are at best 1 to 3 year contracts which have a promise to get renewed,
Got it.
right? And they need to see what is the strength of those contracts. And that's where the second is ability to underwrite the vehicle itself. If the banks still do not have, I think, enough know-how or the teams on the ground to obviously underwrite the vehicle and repurchase the vehicle if the need be. I
Right.
cannot possibly go to some interior location in Jharkhand and repurchase the vehicle as a bank if there is an issue. So
Right.
the feet on the street, ability to underwrite the technology, and the contractual structure are the top three things I can think of from a debt perspective. But again, very so the way we are kind of approaching this entire space for our equity investors is you have to answer two things. One is scale and technology.
Got it.
So what are the business models where you need not take a very early bet on scale and technology? So if you break down this subsegment, you have battery material manufacturers, you have battery recyclers, you have swap guys, you have charging infra providers, you have fleet, you have NBFCs. So
Mhm.
now wanted to kind of talk of this NBFC model. I find it very interesting, right?
Right.
Because you're not, as an NBFC or a financier, you're not betting on a single technology. Your shop is open to anyone who wants to do business with you.
Right.
So I can potentially finance XYZ OEM, ABC battery, or charging infra. And that's where the scale
Right.
answer also comes in. So I think that is one business model we see is picking up. The question on that is when does the banks come in?
Correct.
So when does the big balance sheet
Big
arrive
balance.
in that
Correct.
sector? And is big balance sheet interested? Right now, the business is small, but at some stage, it will become big enough for the big balance sheet players to come and participate, and that's where the NBFCs will have to really compete. But I think by that time, they should have
Become big enough
become
to
big enough, develop enough lead, know-how, operating expertise to kind of compete and coexist with some of the large banks. I also expect some of the M&As to happen
okay.
where the banks may acquire some of these NBFCs or have them as
Now
their extension.
that's
But
going
I
to be an
do
interesting conversation, right?
that's going to be an interesting.
But talking
So
about, yeah, go
so
ahead.
so so that is one space we are encouraging our investors to look at. Second is the fleet space itself. Because here again, you're not taking a call on one vehicle or one technology. You are basically managing the front end. And the back end can be serviced by so many technologies
Right.
or charging options. So that's another space we are encouraging our investors to look
Right. Talking about big balance sheets, and this is one always this conundrum which is happening in the EV space. The whenever there's a technology shift, it's the startups who take off and start to build something, and then you have the big balance sheets coming in. Leave aside the banks, even on the OEM side. But there's some interesting thing which is happening. Even the OEMs are raising funds on the back of a new technology. For example, you say Tata, Mahindra, etc. Is it going to be the big boys with the big balance sheets where the equity is going to go to, or is it
So I'll tell you,
likely?
and this is again my personal view. I think in EV, the big boys are able to solve the chicken and egg the problem because they are able to demonstrate an offtake.
Mm,
As if XYZ large corporate is setting up a gigafactory, right, they're able to demonstrate the fact that those batteries may be used for their own OEM itself. And that is where the lending fraternity or the equity investor community draws comfort. Now, if tomorrow, let's you or I set up a gigafactory, how do I sell? Right? And it's a difficult market. There are existing battery providers, the lead acid providers who are kind of transitioning into lithium ion or other chemistries and having existing relationships.
right.
So the big boys are able to get the ecosystem together,
Mm-hmm.
which is the OEM and the battery ecosystem. And that's where they have a big lead or a definite lead vis-a-vis someone who's just a startup. I think the journey is going to be very challenging.
So is it?
That's my personal view of the space.
No, no, and
And
I think
happy to get corrected
no,
if
no, no. I think that's also what's happening because earlier we had close to around 250 odd OEMs, startup OEMs, especially in the two-wheeler space. Now this consolidation has happened.
now
Now
there
there
are
are like
three.
three or four.
And that's what answers your question, I
Yes,
guess.
it does. It does. But then there. So from a startup's perspective, let's uh, EV is a growing space. It's the ecosystem of the future. So, are there any specific spaces? Let's talk about the OEM side of it or the product side of it. Are there any specific spaces that startups should look forward to working on, investing on, rather than trying to say, "Listen, I'm going to build the entire vehicle and start to fight with the big boys"? What would you say to those guys?
So if you take any EV, right, 50% cost is battery, where most of the innovation is happening. Now China controls what 70-80% of our battery market.
Right. It does.
Last week, China crashed the battery prices by half, and the entire world has to set up again need today. And I was just thinking, in fact, last evening, all our business plans, the cost curve is determined by China, right?
Right.
So they are made, whatever IRR is making is a function of how quickly China can ramp down the cost curve.
Right.
This happened in solar.
Yes, it did.
Today, we have reached from a 15 rupee tariff to maybe a 2.5, 3 rupee tariff in solar because of the capacities and the efficiency which came from China, right? Similarly, in EV also, I think we need to kind of find ways to decouple ourselves in terms of our dependence on an external
But is it
environment
really
geographies.
possible?
It is not possible in the short term, but if we can offer so much demand and if a lot of capital can be put to work from the established players, at least a gradual process has to start because if you want a full fledgling, independent, vibrant industry to run without any externalities and dependence on an overseas country, then you need to kind of uh, think early because I was another reading another we are like 20 years behind China right
Yes.
now in the
Right.
EV space, roughly 200, yeah, 2001 or something in terms of where China was. So
Right.
there's a lot of catch up to do. I think we may not be able to do that in the short term, and by short term I mean a decade.
Right.
But at least someone has to kind of start thinking in those lines.
But then let's take the learning from solar.
Because I'll tell
Yeah.
you, so I was just coming to that. Now you have the issue of ALMM, you have the issue of anti-dumping, right? So there's always this regulatory overhang from investor perspective when you're importing,
Right.
right? Now in solar, because solar has become big, solar is viable now. Everyone is kind of has achieved parity. So there's a lot of incentive, and it is an industry which is standalone profitable. So, and that's why I think there's a lot of global domestic manufacturing happening in the solar space, where you see the supply chains being set up. We're still importing the raw
Yeah.
materials, but we are at least assembling cells and panels, etc. So that's not even happening in EV. When
Right.
EV, we are pretty much importing 70-80% of the cost.
Right.
If this is too diplomatic, they don't cut it.
So then that's the then isn't it time for us to do if we are going through the same learning curve what we did in solar, and the same thing is happening in the EV. What is it that can be done differently this time around? Because we can't continue to be 20 years behind China in this case. And if there's a learning which has happened in solar, might as well. So what would those be?
So, for
How can
example, I mean, there was, and I don't know how far that is from. We've discovered lithium,
right,
right, in a couple of areas in India. How quickly can we get those potential lithium mines to commercial production? I don't know, but that is a starting point till you have control on the raw materials. Or can we get into raw material supply agreement with countries in South America, right,
right,
where you can potentially source raw materials from? Because till you have control on resources, you cannot pretty much dictate the front end of the value chain. So someone needs to, and that is obviously a large capex,
and that's also a lot
item,
of geopolitics.
geopolitics, capex. So that's where you need to think through
Right,
in terms of getting the entire supply chain in place, then solving just last end of the problem. India will always offer market, right,
right.
because of that demography, the size we are. But then how do we service the market is equally important.
Absolutely. And this is where one of the points you brilliantly raised around the fact that why the investors look at India differently. The size is there, but in terms of the value per dollar or the ROI per dollar invested in India continues to be less. And
So I have a
part of the
slightly nuanced take on that. If you are talking to an investor who has to do an Asia investment,
Hmm.
I think the but logical choice will be India,
Okay.
right? I think India offers scale, it offers decent returns, if not great returns, and you can make a potentially IPOable business. Indian capital markets are doing amazingly well.
Right.
But the moment you're competing with the global pool, as I mentioned earlier, the moment it's potentially a US capital, then I think US offers scale, so maybe Europe offers scale, and dollar edge returns are better.
Mhm.
So I think the Asia pool of capital, I will see more and more coming into India, or rather capital dedicated to investments in Asia. But if there are global funds, they will struggle to do India.
Okay. So it's not necessarily a company, and this is I'm just trying to break this for a lot of people or an audience out there
Yeah.
who are startups who want to raise funds. We're going to come there as well, but it's not necessarily an issue with the company. It's also you need to start to think of it from a nation perspective, where exactly the fund is going to.
So yeah, only when so you have to think this way, right? Most of these funds are billion-dollar funds. Out of that, Asia allocation will be, let's say, a billion or a few million, maybe $700 million or whatever, right? Now, first that allocation has to happen, and
Correct.
that will only happen when that pool sees a certain minimum threshold return. Once that allocation is done, then it's between the companies which are there present in the landscape within Asia.
Right.
I'm also seeing a lot of capital, if we can call Middle East, right, as a slight extension,
Mhm.
right? So I'm also seeing a lot of interest in Middle East because that economy offers dollar hedge
Oh,
returns,
yes, it does.
right,
Right.
and is offering scale as well and decarbonizing very quickly because they are primarily an oil
Oil
economy.
economy.
So the focus on decarbonizing their fleet, or potentially green hydrogen, a lot of batteries, stationary storage. So India is actually competing with the neighbors as well, if you could call Middle East as an extension, right
Mm.
there.
That's a very important point, and I think many times as startups out there to raise fund, we start to miss out on these nuances of fundraising. And this is where I was coming back to the earlier point we talked about as an OEM. In an OEM space, you nicely categorize the space. One is about the OEM, one is about the services, one is the CPO. In each of these segments, we were to talk about very niche area where you would look out, you would want to reach out to some startups working in that space. So what are those typical niche spaces that you think would be of interest to you or
Yeah.
to investors like you?
So if charging infra, right, let me start with subsegments. So charging infra, I will look at a company we can really provide fast charging, right?
Okay.
Now, there are companies which are now claiming that they can potentially charge between 15 to 30 minutes. But then what is the impact of that on the battery life? I don't know. That has to be proven. So if there's a combination of the same number of cycles plus very efficient charging, I think that company will be a standout, right? Vis-a-vis all the companies we have. So that's on the product side. On the network side, I don't see any pan-India player yet who's
Hmm.
got a very, and it's a function of capital and the sweating of the asset as well, right? So we don't see any pan-India, and there are a couple of large strategics who've come into this space. I'm assuming they are in the process of rolling it out. On the battery swap, how do you make money,
Hmm.
right? So is there profitability at the unit level? Is there profitability? Because there's a big cost of redistributing the batteries in battery swap. Plus, you need to have three batteries to cater to two batteries in the ecosystem. Right? So you're obviously loading the cost of one extra battery on the overall network. Now, then how do you make money in that? Now, again, continuing with swap, there are seven OEMs all telling the battery guys that this is the kind of battery you need to make for my
Right.
vehicle.
Right.
So OEMs are not customizing their product for your battery. You need to. So how many batteries can you have potentially,
Correct.
right? Or you just make a battery and hope for the market to potentially make a vehicle because he has to sell vehicle at a 50% cost lower to make sure that. But that's a very small segment potentially you can cater to. So that's on the battery material side itself, which is let's say graphite, anode, cathode. There's some very good work happening in India, but you have to compete with China. I think
Correct.
China is still far ahead. A lot of pre-qualification process happens,
Hmm.
for the OEMs to accept your product, which is again a long lead cycle. You have to set up pilot, you have to set commercial production before you can get into offtake contract for 7, 8 years. Then, which means you need again a large balance sheet to have
Right.
the patience to wait for those returns and the hockey curve to kick,
Right.
right? So I don't see again startups kind of possibly able to play in the battery material space.
Correct.
Uh, po- Possibly. I think fleet is where a lot of startups will do very well.
Mhm.
This is a business which is very operationally intensive. You need to manage drivers. It's not easy. If you're running 10,000 vehicles in India, which essentially means managing 10,000 drivers,
Right.
I think the large platforms globally may not want to do such operationally intensive business. And that is why someone who's feet on the street, getting your hands dirty, running a large business, plus catering to the gig sector or the e-commerce sector or the BB, I think that segment will continue to kind of attract capital and business as well.
Understood.
NBFC, again, as I mentioned, I think very promising, especially within NBFCs. I think
Hmm.
bus leasing will become very interesting because one bus is around what 1.25 CR. So then the capital deployment is so much faster,
Correct.
right?
Correct.
So that you have to also think of deployment when you think of investor. Investors make money by deploying capital,
Right.
right?
Right.
That's how they make return. So how quickly can I get a $200 million check into India? Because the more they hold on to capital, the less carry they can give to the investor.
Right.
So which form factor you're getting into from a leasing perspective? Maybe bus, maybe three-wheelers as well. I think two-wheelers is still the jury is out, but and the advantage with bus and three-wheelers is that you have a B2B contract in some of the sub-segments. So for example, bus, there are so many concessions out from the government as well, right?
Mhm.
For transporting for electric bus usage. Similarly, in three-wheelers, you are operating in a business which has got marquee customers
Right.
on the other end as well. So that's where I think leasing is headed for now.
And
I am talking about because this market is changing every 6 months. So I'm talking for now.
so, viewers, that's all that we have time for in section one, part one of this episode. And look out for section two, which is going to come out very soon.